Hi everybody, this is Thomas Wynn from Wynn Capital with the 2026 first quarter market summary. On the screen is our contact info, so reach out anytime if you've got questions or comments. Before we get into the summary, let's look at the graph of the S&P 500 so far this year. The big news, of course, is the Iran war, which started on Saturday, February 28th. Earlier in the year, the market made a new all-time high on about the very end of January. Monday, March 2nd was the first trading day after the start of the war, and the market went sideways for several days until finally the price of oil and other factors led investors to sell, bottoming out on the 30th of March, down about 10% on the year. The talk of a ceasefire started and the market rallied. The ceasefire was announced on Tuesday, April 17th. The market gapped up and has been drifting higher ever since. Over the weekend, peace talks failed, and we'll have to wait until 3 o'clock on Sunday, which is today, is when the futures start trading, 6 o'clock on the East Coast. So we'll get some insight into how investors feel about the failure of the peace talks in a couple of hours. Here are the numbers for the first quarter. U.S. market was down about 4%, and international stocks down just a fraction. Global real estate up a little bit, and bonds down for just a fraction. Now we're looking at returns over the longer period, from the 12-month period of 5 years annualized, 10 years annualized, 15 and 20 years. So the bull market started in about 2009, and we've been up for about 17 years with about 3 declines: COVID, the 2022 inflation decline, and the tariff decline. Next up, we're looking at news for the past quarter. The news is below for each of the months, and you can take a look. As you all are well aware, we're in uncharted waters with major foreign and economic policies made by a single person, mainly through social media tweets. Now we're looking at news for the last 12 months, and pretty much the same thing. Looking back, it's pretty much conflicting policy changes on a daily basis and a lot of uncertainty. Now let's look at how equities did for the U.S. and for foreign markets. And first up is the U.S. with small value stocks, small cap stocks, and value leading the way with positive returns, and then with negative returns, growth stocks. So a rotation out of growth and into value and small cap. In international developed, the same trend with value and small cap having some positive returns and growth having negative returns. Somewhat similar in the emerging markets, with value doing the best and growth doing the worst. Now we're showing country returns with the US down here on the lower half of performance with negative returns. The average was down in general, but there were a lot of stocks that had positive returns and some with very large negative returns. Now we're looking at commodities, and this is where all the action was and what's leading the market to be as unstable and uncertain as it has been. The 1, 2, 3, 4, 5 top categories with triple-digit returns in some cases of the price of all fuels going up dramatically. Over the long term, commodities have had a very, very poor 20-year return, annualized rate of less than 1%. 15 years, a really tiny return too. But lately, commodities of all types have been going up. So for the quarter and for the year and for shorter periods, very good performance from commodities. Okay, this final slide is DFA's commentary that, as usual, illustrates the simple fact that to capture the returns of the market, you have to be in the market. The recent quick reversals and the tariff decline and the recent rally from the Iran war lows illustrate that just when you think the market's heading for a large decline, it can, without any good reason, rally to new highs. If you zoom in on this chart, you'll see a couple of very interesting dates that I put in that were personal. My start on the floor of the Pacific Stock Exchange was in January of 1981. And I started my first company in July 1st, 87, which was Wynn Options. So I was trading from my own account, living off the profits of my trades starting in 87. And Black Monday, about 3 months later, was Black Monday, a 23% decline in a single day. Almost a quarter of the value of the stocks disappeared on that one day. Note that today, if there was a 23% decline, the Dow would now be down 11,000 points. This around 2003, pretty much the beginning of the year, is when I started Wynn Capital Management, and we're still going strong. We are now past 3 p.m. on the West Coast, so the futures are open, and the S&P is down 1%, and oil is up 8%, I guess pretty much due to the failure of the peace talks. A long way to go before tomorrow's opening, so we'll see how things look in the morning. Okay, that is it for now. I hope you find the video helpful, and if you have any questions or comments, connect with us anytime. Thanks a lot. Bye-bye.